Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of CPS Technologies, a company that makes special materials for things like electric cars and military gear. Get ready for some twists and turns because their latest financial report is a bit of a bumpy ride. It's like they hit a pothole on the way to success. First off, CPS Technologies makes advanced material solutions. Think of them as the guys who provide the ingredients to make things stronger, lighter, and more efficient. They sell to a bunch of industries: transportation, automotive, energy, even aerospace and defense. Their stuff ends up in high-speed trains, electric vehicles, internet infrastructure, and even armor for the military. The company uses metal matrix composites, or MMCs. These are combinations of metals and ceramics that give better thermal conductivity, how well heat moves through something, controlled expansion when heated, stiffness and lightweight compared to regular materials. These properties are very important in applications where failure is not an option. Now, let's get to the less sunny parts. The company relies heavily on just a few big customers. If those customers reduce, delay, or cancel orders, CPS could be in a tough spot. Having a customer base that depends on few clients is always a risk. Imagine running a store and a couple of customers account for most of your sales and they decide to go elsewhere. Also, selling their products takes a long time, sometimes years. This makes it hard to predict how well the company will do, and if customers cancel orders, CPS might not have enough time to cut costs. Here's another challenge. The company faces competition from companies outside of the United States. If the dollar is strong, CPS's products become more expensive for international customers. CPS might have to lower prices, which would affect how profitable their products are. Looking at specific markets, CPS sells base plates and heat spreaders for motor controllers used in electric trains, wind turbines, and electric vehicles. This is a growing market. They also make hermetic packages, which are used in satellites and avionics. These packages protect sensitive electronics. CPS is the only company that makes these packages with an AL-IIC base, which is lighter and handles heat better. These are being used on GPS satellites and even on the Mars Perseverance rover. One more thing to talk about is their armor, hybrid tech armor. It's lightweight and durable armor, good for extreme environments. It's been used on US Navy aircraft carriers. CPS faces competition in the armor market from companies offering alternatives to their hybrid tech armor. These alternatives involve trade-offs regarding costs, weight, and anti-ballistic properties. This puts CPS in a position where they need to show that their armor is the best choice, even if it costs more. Cybersecurity is also a risk. CPS is working to improve its cybersecurity to protect sensitive data. Let's take a quick look at the financials. As of March 10, 2025, there were about 14.5 million shares of common stock outstanding. The company needs to make estimates, judgments, and assumptions. For instance, the company monitors the status of receivables. This is money owed to them. They also value their inventory to make sure it's not overvalued. Additionally, they have to determine if they will be able to use their deferred tax assets. Now, let's get to the numbers to understand what they mean. Total revenue was $21.1 million bananas in 2024. That's a 24% decrease compared to $27.06 million because an armor contract ended, although sales of LC base plates went up. The company actually lost money on its sales with gross profit at negative $0.1 million. That compares very poorly to the 6 times $8 million profit in 2023. In other words, they spent more making the products than they earned selling them. Selling, general, and administrative expenses were $4.3 million. That was down from $5.1 million in 2023, mainly due to a drop in compensation and salaries. The company had an operating loss of $4.4 million in 2024. Compare this to an operating income of $1.7 million in 2023. That's not good. The company recorded a net loss of $3.1 million, a sharp drop from a net income of $1.4 million in 2023. The company had a net loss of $1 million in the fourth quarter of 2024 compared to a net income of $0.11 million in the fourth quarter of 2023. The company's cash and cash equivalents at the end of 2024 totaled $3.3 million. They also had $1 million in marketable debt securities. At the end of 2023, they had $8.8 million in cash and cash equivalents. This decrease was mostly due to the year's losses. Inventories decreased to $4.3 million from $4.6 million. So the company wasn't stocking up on a lot of extra materials, instead keeping pace with demand. The company has a line of credit of $3 million with Rockland Trust Company, secured by accounts receivable and other assets, and had no borrowings under this line of credit. The company leases its facilities in Norton, Massachusetts. The lease runs through February 2026 and annual payments were $165,000 in 2024. Exit it now, let's put all this information together. CPS Technologies is at a crossroads. Their advanced materials have a lot of potentials in growing markets like electric vehicles and renewable energy, but their financial performance is really concerning. The heavy reliance on key customers and the long sales cycles are big risks. To its credit, management seems aware of the challenges, focusing on improving factory efficiency and developing new products to diversify their revenue streams. They're also working on meeting standards in cybersecurity. The big question is whether CPS can turn these efforts into real results. Can they win new customers and get their costs under control? Based on the numbers, CPS Technologies needs to show some serious improvements to justify investor confidence, or they'll continue to see the stock price suffer. Thanks for watching. If you found this breakdown helpful, hit that like button, leave a comment with your thoughts, and subscribe for more corporate deep dives.